Extraction service provider marijuana stocks could be the future. What will these pot stocks to watch look like in the long term? ESPs, or extraction service providers, have shown consistent profitability in an industry where consistency is not always a reality. And with only a few to choose from, competition amongst these marijuana stocks remains low. While these pot stocks may not be the largest like Canopy Growth Corp or Aphria Inc., they do have a lot to offer investors. Of course, we can't simply make the decision of whether or not a company is a marijuana stock to buy without first looking at the financials. This should be the backbone of any investor strategy in the cannabis industry. While some pot stocks have shown solid future plans, they may not have the best financials in the present day. But with a little bit of research, we can begin to find value where others may not have been able to. A leading ESP pot stock to watch. Valens Company Inc. is considered to be one of the leaders when it comes to the ESP industry. As a Canadian marijuana stock, Valens stock has had to contend with several issues that are facing the Canadian cannabis industry. This includes everything from confusion surrounding market demand to the recent legislation that allowed extraction products to be sold. With that, Valens stock also has a very advantageous position in the Canadian cannabis industry to be one of the leading pot stocks to watch. As stated before, Canada only legalized derivative products at the beginning of this year. That means there is a great deal of untapped potential just waiting to be capitalized upon. And as far as investors are concerned, Valens stock is still down by around 50% since the beginning of this year. With so much potential for the near future, many believe that Valens stock could be considered a value pot stock to watch. Another Canadian ESP to watch. MediPharm Labs Inc. is a similar company to Valens, but it does differ in some ways. After being founded in 2015, MediPharm stock quickly received a great deal of investor optimism. The company states that it is in the production of several pharmaceutical-grade cannabis oils as well as concentrate products. Currently, MediPharm stock has received a great deal of attention for its 70,000 square foot facility in the heart of Ontario. The company also states that it uses only the best equipment possible, such as extraction machinery made by the company Vitalis. In its 2019 third and fourth quarter, MediPharm stock posted positive EBITDA growth as well as growth in its revenue. Again, we have to remember that this was prior to Canada even legalizing distillate products. Because of this new legislation, there seems to be a long road of potential ahead of MediPharm stock. Its success will greatly depend on how much business it can continue to drum up, as well as its profitability. With this in mind, MediPharm stock continues to attract new investors from all around the cannabis industry.